Hello, hi, and welcome to the market update from 17th to 21st of March 2025. So let's start with the world. So talking news coming in from US, UK. The Bank of England held its key rate at 4.5% due to the persistent inflation that they were facing, and despite the UK economic growth being stagnant. Germany also on Friday approved a plan for spending splurge. This they approved a legislation which would create a 500 billion euro package or close to 546 billion dollar fund to spend on infrastructure and ease the strict borrowing rules to allow the higher spending on the defense sector. News coming in from US. This was the major event that we everyone was waiting for. The Fed Reserve concluded its March monetary policy meeting, which has held the policy rate steady at 4.25 to 4.5%. The Fed officials also indicated that they expected a 50 basis point, that is 0.5 percentage of rate cuts this year, which this stance is unchanged from their previous projection in the month of December. The policymakers, however, expected that the inflation in the 2025 would increase because of the tariffs that the Trump administration has been imposing, whereas they have lowered the expectation on the gross domestic product growth. Their Fed chair Jerome Powell stated that the Fed's base case is that the impact of tariffs would be transitory and that most of the measures of long-term expectations remain consistent with the central bank's 2% inflation target. So this was a positive news statement from the Jerome Powell, which caused the market to bounce in the US. So the US 10-year Treasury bond yield further softened from where it was hovering around 4.43% to 4.258% in this week. The US dollar index was close to 104.146. This has moved a bit up from 103. So the dollar has strengthened as compared to the other currencies. On the oil prices, which was moving somewhere in the range of 70 to $71 a barrel, suddenly towards the end of the week, somewhere on the 20th to 21st of March, moved up and it closed up by 2.07% from the last week and closed at $72.11. Coming to the gold, gold in this week closed at 87,785 rupees per 10 grams, which was down by 0.2% from the last week. Somewhere in the middle of the week, the gold reached its highest value, highest lifetime value of 89,000 rupees. On the dollar front, the US the gold has touched 3000 USD dollar, which is the highest value the gold has reached. After that, there was some profit booking, I think, which has happened in the week, and that's why the gold closed down by 0.2%. So overall impact on the world market was the Fed news, the Jerome Powell news did give a cheer to the market. It reversed the losses which it had made in the last week, and so the Dow Jones was for the week was up by 1.2%, whereas as compared to the Nasdaq, which was a laggard in the up move, and it was close to 0.17%. If we look at the European market, they were somewhere on the flattish front. The good news came in for the Indian market, where the GIFT Nifty was up by 4%. Nikkei was again up by 1.68%, whereas the Shanghai market, after running a showing a up move in the last few weeks, it was down by negative, was down by 1.6%. Uh, Now let's see how was the FII activity towards in this week. After a long time, FIIs were net buyers and they bought close to 5,819 crore worth of Indian equity. DIIs also bought 4,337.83 crores worth of equity. For the month of March, we saw that now the FIS were definitely a net seller at 15,412 crore worth of equity. DIIs had bought close to 30,788 crore worth of equity. So this week showed a change in definitely showed a change in the attitude of the FIS towards the Indian market, which is definitely showing a positive on revival. But let's see if this momentum is carried forward in the next week or not. So, bought by the FII's activity in the week, Sensex was up by 4%. Definitely the same amount, close to the amount the gift nifty was positive. The bank showed a reversal, was up by 5.27%. Nifty mid cap is showed a good bounce at 7.74%. Nifty small cap gave the highest return of 8.64% for the last 1 week. Now coming to the valuation, after the week's bounce back in the Indian market, Nifty 50 trading PE had reached 20.8, which is still below the 2 years and the 5 years average. Nifty midcap 150 trailing PE is at 36.2, which is just above 2 years and 5 years average. The Nifty small cap 100 trailing PE is at 27.7, just above 2 years average and below the 5 years average. Even though there has been a big correction that has happened in the mid cap and the small cap, but the valuation does seems to be have corrected a bit, but still they are on the elevated front. Whereas the Nifty 50 is the index where the major valuation has gone down and definitely looks attractive. Now we look at the Buffet indicator. The Buffet indicator, which is the total market cap to GDP, shows that the Indian market is modestly overvalued with a ratio of 115.57%. The last section, we look into the Indian bond market. The Indian 10-year government bond yields showed a bit of softness from after trading at being at close to 7% yield, 6.9% for the last few weeks. It has come down a bit to 6.62% of yield. If you look at the maturities on the yield curve on the long and medium term is still flat, and on the short term is inverted. So that was all from my side. Hope you enjoyed the update on the world and the Indian economy. Do share, subscribe to our channel, and do keep watching for more updates. Thank you.